Welcome back to the Daily Doji. Today we're doing technical analysis on Bitcoin and Dogecoin. If you want to see more than just that, let me know in the comments. And last video I did last week, the last technical analysis video I did last week, I did a lot of different coins and the S&P and some stocks. So if you want to see the more longer term Elliott Wave count, then go check that video out. I have a playlist of my analysis videos, and this one has been a crazy weekend again. If you didn't notice, I'm sure you already did. So let's check out the Elliott Wave count. And is my wave count still relevant or not? That's basically what we all want to know, isn't it? Was that the bottom, or is the crash continuing and just getting started? So today I'm going to keep it more simple and just focus on Bitcoin and Doge. But like I said, I have other video of last week where I talked about more. And if there's anything that you want to see, let me know the symbol in the comments. All right, awesome. Well, thank you everyone that's been watching and leaving positive comments. This is my Elliott Wave count so far of Bitcoin. I had wave 1. This is the daily chart. Last video I was looking at the weekly and monthly also, or just the weekly. So here was the count. Here's the count that I had for the last year or 6 months or so. And I had labeled this old correction too, just to show people what corrections are. I also have a video about Elliott Wave correction patterns. If you don't know the Elliott Wave correction patterns, what the heck? It's like driving with your eyes closed or relying on headlines, which is, to me, not a good idea. That being said, this is not financial advice. I'm not a financial advisor. I'm a YouTuber. I'm just interested in Elliott Waves. So that's why I'm doing this. I just saw something actually. I see a potential alternative count. So if this wave that we're in right now does not continue on the path that I have drawn out. By the way, how will we know when this correction is done? Well, the way that we would know is if it starts making impulsive waves, subwaves up. So it would have subwaves something like this. Subwaves of that fifth wave, and these subwaves would also have subwaves. I'll change the color of this so you can not be confused. Let's make it, okay, that's fine. So when we start seeing 1, 2, 3, 4, 5 impulse waves, subwaves going up, and even before that, there's going to be this first little wave 1. Now, I was just freehanding this. I'm not sure exactly where this is going to go, but I'm just showing you the shape. The shape, and wave 4 cannot overlap wave 1. That's the important thing. If it does, then it's not a 5-wave pattern, it's a 3-wave pattern, which is corrective and not impulsive. Does that make sense? If it doesn't make sense, read the book Elliott Wave Principle by Frost and Precher. It's a good book, and history repeats itself. it's human psychology is what we're tracking here. And as long as humans are trading, then this is going to be based on human psychology. So it's not the headline that matters, it's the people's reaction to it. And that shows up on the chart as price action. So we don't necessarily need to know the headlines. All we need to know is the price action to track the Elliott waves. That's the principle, as far as I understand it. Okay, so let me get rid of these hypothetical impulse waves, and also let me get rid of this one too. So I just saw something that if this count was wrong, I'd like to have a alternative count. So far though, we're good. But because if this is wave 1, this is wave 2, this is wave 3, and this is wave 4, but aren't people are probably thinking, well, wait a minute, isn't wave 4 can't overlap the top of wave 1? Well, by the way, let me go to the daily chart so we can see more of the details. Okay, so I have some of these subwaves drawn out. Get rid of these. So if this doesn't pan out, then I have an alternative count for wave 3 right here. This was the wave. If this was wave 3, this could have been 1, 2, 3, 4, 5. That is... Now, the problem I have with this, though, is that this wave in the middle right here does not look like a fifth wave to me. Because it's got 1, 2, 3, 4, 5, 6, 7. That's not right. A 7 swing are really just waves of 3. That's why I was saying that this is a 1, 2, 3 wave correction. And everyone else was saying that this higher high was a bullish wave, but I did not see it as a bullish wave. I saw it as a counter wave, as in this was a correction and this wave went up. So the correction is trending down and the counter trend wave is trending up. Does that make sense? Okay. So this is not how I saw it, but somehow if this is a truncated fifth wave, I don't think it is, but if the current count is wrong, I'll try to go back to that one and see if it fits. So really what I'm doing is just counting Elliott waves, because the Elliott waves give the predictive power. Nature always travels in waves, and they're predictable. That's the part of the theory. And some of these rules are never broken. So if the rule is broken and it goes and stays below the previous high, then I will change my count because it has to be wrong. Like that, but that hasn't happened yet. So let's go back over my count and see why it's still okay. Because some people might be looking at, okay, so this was my buy zone from a long time ago. From probably a year ago, I had this buy zone and I ended up stretching it out. So we saw over the weekend that Bitcoin dropped to 17,000 something. Does that mean this count is invalid because the previous wave, the high was 19,600 or so? Right about 19,600. Well, if you look at it right now, this dotted line, it's back above this wave. And what I was saying on Twitter, and what I've been saying in videos, is that it's possible for it to wick under the wave 1 and the wave 4 to wick into each other, but that's it. It can be a wick, but it can't be a solid candle. So let's look at this candle and see what's going on. Look at that. Do you see that? Let me stretch this out. Look at that. That's crazy. So you can see these two candles. It's like they went to the very bottom of my buy zone. And then the wicks just came out. That is wild. Wow. Man, that's a nail biter. Well, biting nails is probably better than what a lot of people are doing. But if you're really upset during this crash, then it probably means you put too much cash in, or that you borrowed, which I definitely wouldn't recommend. And even I said that I'm not a financial advisor, and even if these Elliott waves, even with Elliott waves, it's still risky to trade because it's difficult to deal with your emotions, the market conditions. You know, who knows what's going on in everyone's life other than trading. So that's why I keep warning people to be careful for the last year, because I see people being totally reckless. People that don't know Elliott waves just throwing their money into stuff, and because of some influencer or something, that is dangerous. And I think not by now everyone would agree that that's dangerous. Okay, so my count is still valid as of right now. It wicked below the buy zone and then got right back up. So these candles are still okay. And now it's back over 20K. What a ride. So it's back over 20K. If it stays over, then we're still good. If it falls back below 19,600 and stays there, and the candles close and it's not just a wick, the longer term candles, then my previous count will have been wrong, and I will have to admit it and figure out another count. Because Elliott waves are not wrong, it would just be my count that would be wrong. The Elliott waves can't be wrong unless the market is manipulated. And a lot of people overuse the word manipulation to mean like whales dumping on people and stuff. That's not necessarily manipulation. That's how the market works. Everyone's trying to make money. Some people are gonna dump it when others don't want it to be dumped. That's unfortunately the game. So if you don't like that, then don't enter. Wait on the sidelines and just watch. You can't get wrecked if you're just watching. But anyway, I think it's the wrong time to give that advice. I think everyone was already trading anyway, but my advice over the last year was to be careful and trade with trade it with a paper trading account. If you don't know, there are paper trading accounts. I think Webull has one for free, and Ameritrade has one for free that you can trade without your own money. So you can just use fake money to practice, and that was my advice to people that don't know what they're doing. Did anyone listen to that? Probably not. But I'm not their advisor anyway, so it's not my responsibility. And I made that very clear the whole time. And I also said the whole time that just because you know Elliott waves, it doesn't make it foolproof. It's better to me. For me, it makes it okay. That I know what level of risk I'm comfortable with because it's not my first rodeo. So I've risked things before, and I've succeeded and failed at different things, and I know myself. But at the beginning of trading 5 years ago, I didn't know Elliott waves, and I didn't know myself as well as I do now. So I got wrecked a little bit. But thankfully, I wasn't trading more than I could afford to lose, so it worked out, I guess. And even back in 2017, I didn't get wrecked like everyone else did, because I was learning these waves already a little bit. Alright, so we're still good. I mean, my original count is still okay. As long as we don't go back below this buy zone, and it goes up from here, then we'll be okay. And let's move on to Doge, because the waves look a bit different. By the way, for the positive people in the comments, someone said that this is the best TA on YouTube. I really appreciate that. I don't know, because I don't watch the other TA, but of course I'm biased, but I think, yeah, why not? It's crazy to me that I would make the best TA on YouTube without any financial background, but I do have a background in psychology, and like I said earlier, Elliott waves tracks psychology, or Mother Nature, actually. Alright, so my Doge count was something like this. I was showing these 1, 2, 3 waves down, and then the subwaves were waves of 3. So let's see here. Are we at the bottom, as everyone wants to know? I think Bitcoin will pave the way. If Bitcoin stays over 20K, or over 19,600, then I'm pretty confident altcoins, including Doge, will follow a similar pattern, but not exactly the same, because these waves have not been following exactly. The Doge and Bitcoin charts just look much different, and Bitcoin is a few years older, so it's a little bit different, but I think in general, Bitcoin is going to set the tone for the whole crypto market. So here I had the 1, 2, 3, 4, 5 waves going up, and then 1, 2, 3 waves coming down, 3 waves going to the side, and then 3 waves coming down. This still looks, this still looks okay. If this is the bottom, So Doge is different, like I just said, the Doge chart is different than Bitcoin. If Doge keeps going down, it would be fine. I mean, it would be fine for the Elliott Wave count. Would not invalidate anything because there's no previous wave. This was the whole wave up, is done. So this wave could come back as low as it wants, even could come back and touch zero and still be an legitimate Elliott wave. And then it would turn around and rocket from wherever the bottom is. Now, I was saying in the last video that I think the bottom is soon, and I was waiting for like one last wave down. And that last wave down could have been the last wave. I mean, it barely made a new low, if at all. This looks like a sideways action in Doge. So I'm going to be keeping an eye on Bitcoin. I did buy a lot of, well, not a lot, but I bought several different altcoins during this whole dip. But not more than I can afford to lose. Because what I was saying the whole time is, what are the fundamentals of crypto? There's no company backing it up. There's no management team on most of them. And anyway, the whole point of crypto is to not have a company or management team. The whole point is to be decentralized, which means not just one person or group is controlling it. So what are the fundamentals of that? I'm asking. I don't know what, I mean, that's why I think technical analysis is the best, because you can see the fundamentals show up on the chart. I don't have to necessarily know what the fundamentals are. I just need to know what the price action is. So, I mean, this has been crashing. People have been shorting Celsius and trying to liquidate it. There's also, I saw something on Twitter this morning where there's another attack going on with a different crypto. That's not what this channel is about, or that's not what this episode is about. But on the 1 hour chart, Doge is just now above the 200 EMA, which is a good thing, bullish. If it stays above that white line, that's a good sign. But this is just the 1 hour chart. So you would ideally be on a longer time frame for that. But it depends, whatever chart you're trading, stick to that time frame. I see something right now. I see something that looks like 5 waves. One. Oops. What is this? It's not what I wanted. Okay, 1, 2, 3, 4, 5. Okay, that looks like a 5 wave right there. Now this is just the beginning. If that was the bottom, it was barely the bottom. It just made a new low by a little bit of what, 4.9 cents? Wow. So I see what could possibly be the first impulsive signs, but, and you know, I personally was buying a little bit this whole time, but that could be good. I'm going to try not to get too excited until I see some more evidence. But this could be the first signs of an impulse. Pretty cool, back over 6 cents, wow. Alright, so I think that's it for the video today. If you have any questions, let me know in the comments. Do your own research and trade at your own risk. Like I said a million times, it's risky even if you're counting it well. But that being said, I'm still okay doing it. So, good luck. Have an amazing day on purpose, and I'll see you in the comment section. Peace.